Welcome to the Capital Spreads week ahead. Today is Monday the 1st of October 2012. And of course October historically being a very volatile month, it's also been subject to recording some of the biggest falls for equity markets in the past. But actually on the whole it does tend to be a more positive month for equities, and we're just seeing some buying at the moment that's pushing the FTSE quite a bit higher. So we're around the 5,800 mark for the FTSE. The Dow futures also looking good. We're calling the Dow to open higher. It's at currently 13,500. It's also supporting the euro somewhat. Euro dollar at 129.00. For cable at 161.40. Gold is at 1770. And oil, which isn't really joining in the risk rally this morning much, it's at 112. That's Brent crude. So really the last few days have been very much evolving around Spain. Will they, won't they go for a bailout? Of course, their budget measures last week and bank stress tests just seem to have alleviated a bit of pressure on the bulls. So a few sellers have gone away, and we're just seeing the markets rise, perhaps on the back of some not bad manufacturing numbers from the European Union, in particular Spain and Italy. Manufacturing data there just coming in slightly higher than expected. So a little bit of optimism maybe around the fact that perhaps Spain will eventually seek that bailout. So that's just helping risk appetite this morning. We also saw European unemployment remain at 11.4%. Then this afternoon we get manufacturing data from the US, where we expect possibly the survey to come in around that 50 mark, possibly just above it. So what's in store for the rest of the week? Obviously tomorrow we have UK construction, the PMI construction survey. That is expected to rise a little bit. This obviously is a component of GDP that has really suffered quite significantly over the year so far and been a big contributing factor to our continuing recession. But that is expected just to rise a little bit. Really, for tomorrow, the only other thing that's of note is Australia. The Reserve Bank of Australia are due to make an interest rate decision. We get other interest rate decisions, as I'll mention in just a second. So on Wednesday, we get the service PMI surveys. That's from both the EU and the UK. And of course, we've seen the services sector in the UK remain really quite strong. In August, it hit its highest level since March, but services are just meant to give back a little bit. However, still remain very much above that 50 level, which is crucial, which suggests that the services sector in the UK is still very much expanding. Then, of course, we get US ADP employment figures. That's the private payroll number, which is expected to come in at about 140,000, below the big jump we saw last month of 200,000. We then also get the US services data too. Then on Thursday, it's very much a central bank day. We've got the Bank of England and the ECB announcing interest rates. We're not expecting any action from either really, but it would be very interesting to see what they say, particularly the ECB. Of course, Mario Draghi will probably say that he's done his bit now. He's made his announcements. It's up to the governments to back him and forge their own plans for growth. And of course, we've seen Spain paving the way slightly for potentially a bailout, so that they'll have eased at least less stringent conditions if that bailout does ever come. So then just at the end of Thursday, we get the US FOMC minutes as well, so that will be an interesting read to see what the decisions and the drivers were behind their QE3 announcement earlier in September. And then really probably the highlight of this week, of course, is the non-farm payroll on Friday. The figure there is expected to be around 110 to 120,000. Of course, last month we saw that figure come in under 100,000. That was much worse than expected. So again, that will be a key focal point for the week. So lots of economic data this week, and really it could potentially pave the way for whether October will see its usual bout of volatility, or whether it will be, as it has done in history, another grind higher for equity markets. That's it. As ever, do give us feedback, media@capitalspreads.com.